Howdy folks, this is Dr. Jeff Camarda with a piece called Hail Caesar! As coincidence would have it, it's about time we got you some more detail on Caesar Camarda's new proprietary individual stock strategy, which is intended to target the sort of quality on the cheap stocks paying nice dividends that we expect will get us winningly through the bumps that we foresee ahead. Now, Camarda began research and developing Caesar last May and experimenting with Jeff's, that's me, my own money, as is our habit when we develop new techniques. In anticipation, we began development of the rocky times that we foresaw in the investment markets, which, alas, have come to pass over the past third year or so. Now, when talking with many of you over the past few months, I've noticed that while you've been invested in Caesar stocks for some time, the name really hasn't rung a bell, and that's, of course, on us for not being more active in communicating this. Now, Caesar, of course, is named for the eponymous Roman, that means of the same name, Roman general-cum-Emperor who transformed Rome. It typically, Caesar holds 20 individual stock positions picked by your portfolio board according to the rules below, which I'll summarize for the video. For those who desire a more technical description, please see the Baron's internal strategy overview below. Hope that you like it. I'll read through that pretty quickly, but it's okay if you go ahead and close the video if you get bored. Anyway, hope you like it. And from Dr. Jeff Camarda, Hail Caesar. I'm not sure what to salute his name is like this. All right, so here's a summary of Caesar buy rules. Assemble universe of potential value stocks from respected sources. We rank the stocks by annualized 5-year return based on the current price, the target sell price, and the dividend yield. Which is to say, if we think the stock is currently trading for 10 and we think it might be worth 20, and then we'll get a dividend of 5% per year, we calculate what the 5-year compound rate of return is with those cash inputs. Buy at this price, hopefully sell at this price, get paid along the way, and then we rank them by the highest return on investment based on our analysis. And of course, that's not guaranteed, but that's what we think will happen, or the valuations are fairly appear to be fair at those numbers. So stocks with dividend yields over 3% have the priority, by the way. The third criterion is we take the top 20 ROI stocks, which as I just explained, and subject them to a very deep screen. We do an original research report that's prepared by our staff. It has to be improved by the board and by me. We do a very deep fundamentals screen to make sure it passes the test, looking at price to earnings ratio, cash flow metrics, debt to equity, payout ratio, stuff like that. We do a technical alert screen and make sure that passes the test. And then we do an initial and ongoing adverse news check and make sure those pass the test. So here's the overall strategy, and your eyes may, or the description of the strategy, which is, springs from our board rules. And if your eyes glaze over, feel free to go ahead and click me off, and we'll catch up next time. But here's the Caesar strategy overview. So Caesar is an opportunistic strategy that seeks to buy quality value opportunities at depressed prices. The portfolio will generally be comprised of 20 generally equally weighted components, though weights will change over time based on relative performance. Technical analysis may be used to define recent historical low points, generally 1 year, and target purchases at reasonable lower levels, which sometimes are seen around news, earnings, general market drops, or other events. We generally identify attractive value opportunities based on traditional fundamental analysis and assign a target sell price based on internal and outside analyses, which we believe would reflect fair evaluation. Then perform a hypothetical return on investment analysis using current price level as input cash flow, trailing 12-month dividend payments as annual output cash flow, and target sell price as final output cash flow over a 5-year investment horizon, and solve for the internal rate of return or the return on investment. Attractive stocks on our buy list are then ranked by this hypothetical ROI. There's a strong bias, but not a requirement, to acquire stocks with attractive dividend yields, typically 3% or better. Stocks trading near the top of our ROI rank list that have attractive dividend yields are flagged as attractive, and these are subject to an additional due diligence screen, including review of company and industry quality of prospects, fundamental metrics valuation, and a technical analysis prognosis. Stocks that pass this screen are proposed for purchase and discussed and voted on, sometimes debated on, by the portfolio management board Purchase orders may then be entered for them after a final adverse news check. Stocks owned by Caesar will be regularly monitored, and our analytic metrics are regularly updated. Stocks will be considered for sale when they approach their target sell price, as amended from time to time, and when more attractive candidates present, or when adverse news or research is encountered, or the technical analytical prospect deteriorates significantly, and such weakness is deemed justified by adverse news or fundamental deterioration, in our analytic opinion. Undeployed cash may be kept in cash instruments or temporarily deployed into short-term vehicles, index funds, or other investments as the board votes to. Where cash is deployed to index funds or other market exposure vehicles on a temporary, thank goodness, basis while awaiting attractive individual stock opportunities, a buy-the-dip mindset may be employed. Investors should assume it's possible that some funds may remain in cash or index funds, though we really perish that thought, and that's not something we expect to do very often. Anyway, there it is in a nutshell, or maybe a coconut shell, or maybe a big old wheelbarrow. But that's the technical, or specific, or analytic underpinnings of the Caesar portfolio. Hail Caesar! Hope you like it. We're very excited about it. I think we'll do very well. Until next time, this is Dr. Jeff Camarda. Bye bye.